Hello students, we have already learnt assessment of cooperative societies in our previous classes. Continuation of that. Now problem number 3. Let us see some more problems and find out how to assess the income of cooperative societies. So here is a problem. RBS College Cooperative Society Limited, Agra, had the following income during the year ended 31st March 2020. Income from college canteen. So this will come under income from business. Income from general merchandise business. This also comes under income from business. Income from credit facilities given to members. Even this one will come under income from business. Interest on government securities. This will come under income from other sources. Taxable income from house property. This will come from income from house property. Dividends gross on shares held in another cooperative society. So this again will come under income from other sources. Determine the gross total income, the total income and tax liability of the society for the assessment year 2021. Look at the solution here. As I have already mentioned, there are 5 heads of income, but salary income is not applicable here. The rest of the 4 types of incomes are very much applicable. Income from house property, I told you it is already mentioned, it is 6,000. It should be taken. Then income from business. So here are the items: income from college canteen, income from general merchandise business, income from credit facilities to members. So all these 3 items fall under income from business. That comes to 61,000. In this problem, capital gains are absolutely nil. Then there are 2 items, that is interest on government securities and dividends on shares held in another cooperative society, 5,000. So together 10 plus 5, that will be 15,000. So if you add up all these things, you will get 82,000. That's nothing but gross total income. Now we have to go for deduction under section 80. So no other deductions are applicable here except deduction under section 80P. Okay, first one, income from credit facilities. So income from credit facilities. Here is the item, 8,000. Then income from other business, that includes this income from college canteen and income from general merchandise business. So these are the 2 items come under other incomes, income from other business. But unless it is a consumer cooperative society, maximum deduction available is 50,000. So this 50,000 is deductible here. Then dividend from another cooperative society, that's also deductible. Therefore that comes under that also comes under ATP, and therefore that is 5,000. So total deductions are 63,000 from gross total income of 82,000. So next, taxable income or total income after deducting deduction under section 80P from gross total income is 19,000. So that is the total income, or we also call that taxable income. Now let us calculate the taxes. On the first 10,000, rate is 10%, so that comes to 1,000. And what is the remaining amount? So after deducting 10,000 from 19,000, what remains is 9,000. On the 20%, so 1,800. Okay, so total taxes are 2,800. On that actually surcharge is being levied, but here surcharge is not applicable. Then health and education cess at the rate of 4% on 2,800. It comes to 1,200. Sorry, 112. So together tax liability is 2,912. Please note, income from house property and interest on securities are not deductible because the gross total income is more than 20,000. So income from house property and interest on securities are not deductible because the gross total income is more than 20,000. This point I have mentioned at the beginning while studying the section 80P. It's assumed that it is not a consumer cooperative society. Therefore, the maximum deduction for income from other activities is 50,000, whereas here the amount is 53,000. So, maximum 50,000 is available for deduction under 80P. So, that's about this particular problem. Now, we'll move on to another problem. From the following information relating to the income of cooperative society for the year 1920, you are required to compute the total income and the amount of tax payable thereon for the assessment year 2021. The society is primarily engaged in the manufacturing of fruit products, that is considered to be a cottage industry. It is given in the problem. Okay, let us see the items. Income from manufacturing and marketing of fruit product. So this is an item of business income. Interest on deposits with Central Cooperative Society. Okay, this will come under income from other sources. Income from other business. So this will come under professional income, business income. Income from collective disposal of labor of its members also comes under income from business. Interest from government securities falls under income from other sources. Long-term capital gains falls under long-term capital gain only, capital gain head. Income from house property will come under income from house property heading. On examination of books of accounts of society, it has been revealed that it is given a donation of 5,000 by check to the National Children's Fund. So donation to National Children's Fund will come under no limit donations. No limit donations. Actually, there are 4 categories. One is with limit donations, and 100% deduction is available on that. Then 100% qualified amount, but 50% deduction is available. Then with limit donations, but 100% deduction is available. And with limit deduction, but 50% deduction is available. We'll see later on under what head this comes. So as I have mentioned, income from house property will come under section 22, so 10,000. So income from business, so from manufacturing and marketing of fruit products, income from other business, collective disposal of labor of its members 16,000. So together 1,74,000, that is the business income. Long-term capital gain very clearly given here, 25,000. We have to straight away take it, 25,000. Income from other sources, you have got 2 items here. One is income on deposits with the cooperative society, and the next one is interest from government securities. So 2 items are there put together, that is 24,000. If you add up all these things, then you will get gross total income. So 2,33,000 is the gross total income. Let us see the deductions now. Here are donations 5,000 rupees to National Children Fund. This will fall under 100% qualified amount, and deduction is also 100%. Therefore, entire 5,000 are qualified and deductible at 100%. Therefore, entire 5,000 is taken as deduction under 80G. Then 80P. So income from manufacturing and marketing of fruit products, income from collective disposal of labor of its members. But here is one item from other business, 78,000. But the maximum deduction available is 50,000 because this is not a consumer cooperative society. If it is consumer cooperative society, deduction available would have been 1 lakh rupees. Interest on deposit with the Central Cooperative Society, this is also deductible under 80P. So 16,000 rupees. This item 16,000 rupees. So this is also deductible. Therefore 1,67,000 is the deduction under section 80. That includes 80G and 80P. So 2,33,000 minus 1,67,000, you will get 66,000 taxable income. Now let us compute the tax liability. Okay. Yes. Tax on long-term capital gains. Say say long-term capital gain should be considered separately for calculation of taxes. Therefore, long-term capital gains on that tax is at the rate of 20%, and therefore that comes to 5,000. Even short-term capital gain taxable at 15%, that should be separately taken, but here it is not there. And even casual incomes, they are taxable straight away at 30%. Here that those items are not there. So other than long-term capital gain from total income of 66,000, so 66,000 minus this 25,000, so you will get 41,000. On this 41,000 you have to calculate the taxes, and the first 10,000 at the rate of 10% comes to 1,000. On the next 10,000 at the rate of 20%, so that comes to 2,000. On the balance, it is taxable at 30%. Here the balance is, say, from 66,000 you have to deduct 25,000, so 41,000 you get. From 41,000 you have to deduct 20,000, so remaining amount is another 21,000. On 21,000 at the rate of 30%, that comes to 6,300. If you add up these things, that will come to 9,300. So long-term capital gain and tax on remaining income together, that will be 14,300. And surcharge, so if it is more than 50 lakh, surcharge is leviable, but here it is not that, so surcharge is not applicable. So amount remains the same, 14,300. On that, health and education cess at the rate of 4% is calculated, that comes to 572. So tax payable is 14,872, but that is normally rounded off to the nearest 10. Therefore, tax liability of this cooperative society is 14,870. Here I have given two notes. One is, as the gross total income exceeds 20,000, income from house property and interest on securities are not deductible. So no deduction is available under ATP. Then donation to National Children Fund of Rs 5,000 by check falls under no limit donations. So any amount can be contributed or donated, and the deduction available is 100%. That is, full amount donated is deductible under ATG. So thank you.